Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Take you across Asia to see how we are set up for trade this morning. And a more mixed bag except for Hong Kong. I think China and Japan are doing okay for themselves. Japan is up almost 1%. SGX Nifty pointing towards a slightly stronger start, about 1/3%, 11,073. And this is, as we've been highlighting, a really good run-up that we've seen in quite some time. But today's session lacks any news flow, any cues to take
on the domestic side,
on the domestic side, yeah. While obviously on Trump's tweets, I don't know whether the wallpaper index has tracked it or not, but
I'm sure it has, yeah.
Not an olive branch of sorts, but just a slight bit of an extension given.
And this is after what China did yesterday as well, which is exempt some goods as well. So maybe some reconstitution. Markets would love a bullish undertone, so that's welcome. We'll start off well. Let's see if we do that. But Devina, the highlight is that the broader markets are doing so well the last 3 days.
Yeah, and they're contributing. So I think the breadth of the market, the indicators of the breadth, probably lending support to the mid cap and the small cap index, and banks considering how they've been beaten down. Last few sessions, PSU banks and
also
the way that they've started moving up and contributing. Yesterday's session was all about real estate and autos. Both these indices did phenomenally well, almost 3.5 to 4% higher on both these indices. That's the Nifty Realty Index up 4%, Nifty Auto, which is up 3.5%. But important day today, it's the weekly options expiry, so you have to keep in mind the volatility that will creep up in the last half an hour of trade. Navneet is joining us to take us through the setup ahead of that. Navneet, good morning.
Good morning to both of you. Well, it remains to be seen whether the short covering bounce that we've seen in the last 5 sessions can continue on this expiry day or not. But Nifty futures yesterday did not do much when it came to a change in open interest. So it was just about flattish. So premium just went up by a point or 2 points there. Bank Nifty is the one where more of additions have been seen in the last few sessions. So yesterday itself, Bank Nifty futures open interest went up by about 3%, indicating there are fresh positions maybe on the long side being taken here. Volatility has been in focus. Remember, a few days back, we were seeing the India volatility index touching the mark of 80. Now that's come off to 15, so that's a comforting sign for the bulls. For today's expiry, the maximum open interest on the call side is at the 11,200. With yesterday's rally, the base also moved higher, and on the put side, it is at the 10,900 strike. But what's the range you can watch out for today itself? I think 11,150 on the upside will be keenly watched out, considering that has been a resistance mark since the August expiry itself. And on the downside, of course, 11,000 remains a very psychological mark. So 11,000 to 11,150 is something you should watch out. Yesterday, however, if you look at the change, we did see put trading coming back into the system. So 11,000 and 11,000 puts saw open interest addition, whereas call right is for 10,900 and 11,000 strike ran for cover. Talking about the stock futures, then CESE has been in focus. In fact, the stock could be up about 2%, but yesterday was the second straight day of long positions seen here. Escorts up for the 4th straight day. Long positions seen for a couple of these auto stocks which are bouncing back. Even Tata Motors, for that matter, saw fresh long positions, and also Tata Global Beverages. Markets were trending higher yesterday, but this stock was down, so fresh shots seen. Looking at the FI data, they bought into the cash segment, though the figure could be meager. But on the futures and options side, especially the index futures, they were both long and shorts added. And on the option side, ahead of the expiry, I think more of hedging took place, or more of short positions actually. If you look at the put long as well as the put as well as the call short, I think total about 21,000 contracts were added on that front. With that, it's back to you guys.
Thanks a lot for that, Navneet. That's a quick update on what to watch out for from the derivative space. Moving on, Parthiv Shah, Director at TRACOM Stockbrokers, is joining us right now this morning with his views. Parthiv, lacking cues this morning, at least on the domestic side. But yesterday's session proved to be a bumper session for real estate and auto stocks. Tata Motors, for one, saw a big jump. Would you start looking at any of these sectors in hopes of a dole-out from the finance minister? If anything comes about that could stir growth back into both these individual spaces?
Good morning, David. See, Devina, if I have to talk about the real estate sector in general, and trust me, I think it's always a very safe idea not to be too much banked upon what the government does for any business. Rather, I think it's better to bet on, in terms of any sector, businesses and managements which are very resilient in such times, so that they can come out even stronger and grow their market share. Same is the case in point with real estate. See, I think real estate, no doubt, I think a lot of gloom and doom is being talked about. But very frankly, I think there are surely pockets in real estate where some of the companies are doing extremely well. And more importantly, if not the residential real estate where the mid and the luxury is really not doing well, I think the commercial space is picking up quite well. And we are extremely encouraged by the fact that a lot of foreign companies are parking in huge sums in the country for a very long horizon. And I think they are surely betting on the rental yields. So I think there are a lot of companies to play this theme. And real estate, I think not necessarily with the lowering of the rates, certainly has a positive impact, and I think that will be seen over the next 6 to 8 months because there is surely a lag. But I believe a very good way to play real estate is through the real estate proxies. I think there are a lot of companies in this space which have really come off, whether it is the home building theme, whether it is the white goods theme, whether it is the cement play, whether it's the cables and wire play. So I think we've been discussing about this stock Polycab, where I think they have generated substantial scale. And trust me, Devin, I think we've realized one thing in India. I think businesses are all about scale and how much of market share they're able to garner at a point in time when there is such a slowdown, where a lot of smaller players are unable to brand themselves out, are unable to kind of innovate themselves out. So players like Polycab, which are focusing on FMEG model, I think that's growing extremely well. And we are also very upbeat on the cable and wire segment, which is growing at around 13 to 14%, and this surely have a 18% organized market share. So this is a theme which over the next 5 years will become a 1 lakh crore sort of a market, where I think Polycab can certainly, I think, do extremely well. So I think such proxies are very good place to play the real estate sector.
Okay. Polycab India there. I mean, while obviously the last 1 month's performance shows you an 8% uptick, but I think the move started only about 15 days ago when the stock hit lows of about 560, or probably even under that. And then from there, it started to pick up, as you can see, for Polycab. It's been a larger move from the lows, at least. That's for the real estate space. Let's talk about the auto pocket as well, Parthiv. And Maruti back towards 6,500 plus from being sub 6,000. Another opportunity missed, or you feel now you may not even get those levels back again?
See, Devin, I think one argument that we constantly hear regarding, and more importantly in the passenger vehicle segment, is the disruption of Ola and Uber, I think, impacting sales of new car buyers. I am not in this camp. India is such a country where there are so many aspirational buyers for whom I think even their first car buying, I think, is still a dream. So I think in which case there is a lot of scope for OEMs, and if not OEMs, I think a new differentiated business model of leasing. In which case, I think a market leader like Maruti, which I think we were very bullish on even when the stock was sub 6,000. The only reason being, I think let's speak very logically, no detailed fundamental analysis. The sales have been down by 40% from their peak, and so has been the stock. So the valuations have reverted back to the mean. And more importantly, this is a cash-rich company. It knows how to innovate itself out, and more importantly, it can sustain a lot of its large-size dealers by giving them heavy discounting. And I think a lot of the worst-case scenario has already been witnessed. And companies like Maruti, I think, which have a very decent rural pockets, I think they will surely benefit with all the stimulus that the government has given in the rural segment, and most importantly, the very good monsoon spread. So the sales number might not be very imminent in terms of next monthly numbers starting to improve, but come next year, from this base, when we start seeing, I think, upwards of volume growth of 10, 15, 20%, I think probably this is one stock that a lot of institutional investors would love to own. So we are even bullish on Maruti at these juncture, but I think somebody who's not bought it below the sub 6,000 levels, it's still not a bad idea to chip into this name. But I think then stagger your buys. I think just buy it in a 2 to 3 tranches and try to average it somewhere around 6,000, 6,200.
Okay, but 6,597 for a Maruti Suzuki in trade yesterday. It's a remarkable uptake on that one. But actually, even the broader end of the spectrum, so many stocks bounced back so smartly. Metal names, JSPL, Jindal Steel, Hisar, that entire bucket had very good moves. And sugar, by the way, had a fabulous move. There's some news flow or some rumors or talks or news reports, let me rephrase myself, about some potential deal wherein India and Indonesia might give access to the Indian makers. So let's wait and watch what happens to all of these. We'll talk to Parthiv about them. But first, let's go across to a research huddle to try and talk about the key newsmakers and some brokerage notes that will be active. There are 2 or 3 initiation reports that have happened today coming from brokerages. So all of that important. Nikki and Sameet join in to talk about that. Nikki, good morning yet again, and let's start with the stocks in news first.
A couple of them, SBI first, where the company's board, the bank's board has rather approved sale of 3.5% stake in SBI Life Insurance. This is done in order to meet the minimum public shareholding norm. The floor price, which was being set, is around 770 per share, which indicates a discount of around 4% at the current market price. We're also looking at Apollo Hospital, where the founder, Sunita Reddy, would be selling in a 50 lakh share for an amount of around 725 crore. The floor price, which has been set, is around 1450 per share, which is at a discount of 3.5% from the current market price. Alchem Lab, where the company has received Form 483 with 4 observation by US FDA for its facility in USA, and Dalmia Bharat, where this company has bid for rupees 60 billion cement business, worth around cement business of Imami. This is an ET news that we're talking about. Dalmia decided to go solo on this one, and initially it held multiple, it was in talks with multiple PE for a joint bid for cement business of Imami. And 2 bulk deals that we'd be talking about. First will be Kalpataru Power Transmission, where the promoter has been selling stake. And in terms of acquire, we have ICICI Pru and Nomura. ICICI Lombard General Insurance, that's the second one, where Red Bloom Investments has sold in around more than 1 crore shares in that counter.
Nice, thank you for that. Sameet, what about the key brokerages today?
Well, a couple of them I'll be talking about. First one is on Seduction Chemicals, where Axis Capital has initiated coverage with a buy rating and a target price of 410 rupees. Now, according to the brokerage, the company's focus on specialty segment and the step up in capital expenditure plans to address the expected rise in demand would aid the growth going forward. Also, as the company is looking to deepen its presence in the global market to capitalize on the emerging opportunities, could lead to a positive surprise both on the volume and the margin front going forward, says the brokerage. Lastly, a favorable product mix and a stability in raw material prices will boost its EBITDA, according to the brokerage. The second one is on IndiaMart, where Edelweiss has initiated coverage with a buy rating and a target price of 1900 rupees. Now, according to the brokerage, a large and growing numbers of buyers and suppliers on IndiaMart's platform are driving up business inquiries. Now, this would continue to lift realizations and attract more paying customers going forward, says the brokerage. Now, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a CAGR of 24%, 51% and 50% respectively over FY19 to FY21. Now, Edelweiss is seeing value in this company owing to its high entry barriers, network effect, driven pricing power and negative working capital that the company has, and that's the reason it has initiated a buy rating with the target price of 1900 rupees.
Well, thanks a lot for that, Nikki, as well as Sameet. I would have actually, I want to pick up on SBI Life later on, but Apollo Hospitals is the other interesting one. Now, Parthiv, how do you read this? In the past 2 months, when the promoters have tried to deleverage, it's been viewed positively. Now, the promoter Sunita Reddy to sell stake via OFS, it may be used for either, Morgan Stanley says it may be used for personal reasons or removing the pledges, etc. Is this an overhang or will it get bought into?
See, I personally feel it will get bought into, Neeraj, and I think it is very important to see what quality names buys into this stake. And case in point, I think we have seen historically in the past. I remember a lot of talk was there when Hero MotoCorp back then was quoting at around 1400, 1600 levels, and the promoters had stole a reasonably good amount of stake, maybe for personal reasons. Still, I think the stock did not just crack or go down lower. I think it has done extremely well from those 1600 levels to current levels of around 24, 2600. So I think not always it's necessary that if the promoters are selling some stake for whatever reasons, I think the stock should go down. I think more important is the business fundamentals. And in this space, I think there are very few pockets to play. One good quality stock we always know is Apollo Hospitals, along with likes of Narayan Rudalaya. But again, this is a very, very big theme. India is hugely underpenetrated, and I think Apollo will stand out, retain its market share, and has all the capabilities to grow. So I think this is something which I believe that, if at all there is a major dip due to the promoter selling of say 5 to 10%, then long-term investors can surely chip in.
All right, stay with us. Parthiv, lots more to talk to you about. But in the meantime, let us also get in Amit Harchekar, Director at Index Genius Investment Advisors, who's joining us on the show right now. Amit, does your stance on the index change? We've seen a decent enough run-up in the last few days. Is it likely to continue?
Well, I would be quite cautious in the market despite this run-up. In fact, now we have a death cross pattern which is playing in Nifty, where the 50-day exponential moving average has crossed below the 200-day exponential moving average. This is an early sign or a warning sign before a larger degree of decline happens in the market. Plus, if you see the entire consolidation which has happened in last 1 month, it is taking a form of a triangle, and though there has been a lot of optimism for a start of a new bull market in the but overall the prices are not supporting that stance. A movement as the market is unable to move beyond 11,200, which itself is the 200 DMA, is also telling us that a lot of long positions are getting unwinded as the market tries to move up, and that's why the momentum has been extremely slow. Plus, if you see from a historical volatility perspective, the historical volatility has now reached to the levels of 15.8. What did suggest that the breakout level for this historical volatility, that is placed at 16.3, which means if Nifty movement beyond 11,200 or below 10,800, I think that itself will trigger the next leg of decline in this market. So we don't expect market to sustain higher levels, and even from currencies perspective, I think the 71.5 becomes a very strong support on the long-term chart, because that turns out to be a 23.6% retracement of this entire up move from what we saw from 68.5 levels. So we believe at these levels, if you want to open fresh short positions, wait for a half an hour trade below 11,050 on the futures. Stop loss would be 11,250, and since it's a death cross pattern which is visible in the Nifty, we are expecting a target close to 10,500.
Okay. 10,500. So if, say for example, if the Nifty opens another 0.5% higher from here, you would go short on the index, right?
No, the logic is that the moment it starts trading below 11,050 on the future side, even for 15 minutes, that is sufficient to open short positions. I think then you can keep a stop loss of 11,250, and as I said, we are expecting a target well below 10,500.
Okay, so 11,050, that's the level to watch out for on the futures front. What about stocks, Amit?
Well, I have a 2 sell recommendation both on the large caps. My first pick would be buying put option on Infosys. Here the reasoning is, on the long term basis, we have been suggesting that Infosys was forming into a rising wedge, and in last 3 days we have seen a good amount of unwinding taking place at higher levels. Hence we are suggesting buying Infosys 820 strike put options, which is trading around 9 to 10 rupees. Here the stop loss we are recommending is 2, and we are expecting a target of 30. Our second pick would be buying put option on SDFC Limited, which is trading around 30 to 32 rupees, and here the stop loss would be at 8, and we are expecting a target of 8. And if you see SDFC Limited, it has been oscillating into another running bearish triangle, and hence we are expecting a decline towards 1950. So both these large caps we believe have a potential to drag Nifty well below 10,800 in the coming days.
Okay. Amit, just one quick follow-up. For somebody who initiated a short call earlier, maybe at 10,900, 950, believing that the markets would go lower, are these levels time to cut off the existing short positions if you haven't already?
Not really. I think he needs to have a bit courage to hold on this position, because positionally, as I said, the market on the long-term charts is giving you a signs of a warning of a bigger decline coming up. As I said, the dead cross is a warning signal which appeared during 1929, 1938, 1974, even on 2008. So major crises, I think they trigger once the death cross is seen. And as I said, if he has a good risk appetite, he can hold on to the short positions.
Okay. So if you have a good risk appetite, hold on to your short positions. Amit still believes that the markets are headed lower. We'll talk to him about some of the auto stocks as well, which are showing that outperformance, because there's certainly a bit of a flare up out there. Actually, a lot of broader market stocks as well, as we discussed yesterday. The kind of gains that have come in to Sterlite Tech, to a Nifty name like Yes Bank, for example, have been quite exemplary. 25, 30, 35% has been the norm from the lows. Anyways, we'll talk about that with Amit Harchekar and a couple of other experts as well. It's time now to get in our special segment, Bloomberg Edge, going, wherein Yash Upadhyay joins us with a pattern that the Bloomberg terminal is throwing up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we're looking at Gulf oil lubricants, and there's a sell signal coming in on the back of the MACD indicator. Now, as we always do, let's first try and understand what the MACD indicator is and how do you interpret it. The MACD is basically a trend following momentum oscillator. It helps you show the relationship between the two moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line. Now, in the case of Gulf oil lubricants, that's exactly what we've seen happening on the daily charts. So the lower panel over here, that has the MACD indicator, and the blue line, which is the MACD line, that has given a negative crossover. So it's crossed below the white line, which is the signal line, indicating that there could be weakness coming into the stock price from the current levels. And if you look at the price chart as well, it has been in a bit of a distribution format for the last several trading sessions. Around the mark of 850, it has been consolidating. It's not moved on either side, or the higher or the lower. And then we saw a big fall in yesterday's day of trade, down close to around 2.5% with volumes almost 3 to 4 times its 30-day average as well.
Okay, and Yash, what are the long-term charts indicating for Gulf oil?
A similar, it is being supported by the long-term charts as well, because if you take a look at the weekly chart of Gulf oil lubricants, there is the trend line which it has met with a resistance at. So this is the long-term chart for Gulf oil lubricants, and the white line over here, that joins the highs over this period, and it has come exactly where it is placed. The RSI too has given a negative divergence. It has fallen off from the mark of around 50, and it has now gone down below that mark, which indicates that there could be further pressure. It has made a double bottom around the mark of 700 or so, and then making a lower high on the weekly charts as well, and meeting with the resistance on the longer term trend line. So clearly there is further weakness that one could watch out for in Gulf oil lubricants.
And percentages, Yash, when this indicator is worked, what has been the average return?
Well, the MACD indicator in particular, Neeraj, has worked very well for the counter, because the last four out of the last 6 times when the MACD has triggered a sell signal, the stock on an average has gone on to fall more than 5% over the next 1 month.
Oh, let's wait and watch what happens here. There are a few names that we should monitor in the Bloomberg terminal indicating Gulf oil as a potential mover. Yash, thanks so much for putting that into perspective. Well, speaking of current and potential movers, a pocket that has started to rally the last couple of sessions are metals. Now, Parthiv, I want you to come in on the steel makers. We did a story last week as well about how the ferrous companies are at valuations from where they will rally. Now, we've spoken about JSW Steel, Tata Steel at length. I want to talk about some of the smaller names if you track them. There is Jindal Stainless Hisar. There is Jindal Stainless, which arguably is the largest stainless steel manufacturer, and people say that the current spate of usage is of stainless steel in metros, in a lot of other usable items. It's stainless steel which is getting that demand, and therefore this one at 36 rupees, arguably one of the largest producers, could be in favor too. So one is the large cap pocket. What about the mid-size ones? Is there an idea here?
See, Neeraj, I think a couple of mid-sized steel companies, and trust me, I think, and even to your viewers, I would like to warn, if one is betting on steel, and that too on mid-sized secondary steel, please understand the risk, and if need be, as per one's risk appetite, not a bad idea to put even an investment stop loss, because when at a point in time when the large cap steel companies are kind of struggling to drive volume sales, it's going to be even more difficult for the mid-sized companies. But certainly, Neeraj, I do acknowledge the fact that in this space, I think the stainless steel maker, and most importantly, one of the lowest cost producer, which is the Jindal Stainless, I think they're surely innovating. And I think what I like about this management is they're surely trying to focus more on value-added products, because I think eventually, even in the steel sector, the only way companies can innovate their way out and not be a typical commoditized company is by having more high-grade value-added products, which most of the competition, most of the peers don't, and where I think there is least amount of dumping taking place. In which case, I think certainly Jindal Stainless has innovated its way out, and the valuations are extremely cheap in terms of even price to book multiples. But one will have to wait out this cycle, because I think they had a debt restructuring and they've turned around, and I believe that the capability of management is reasonably good there. So that is one pocket which I believe one should certainly look into. Another pocket, I think, where I feel it's a very high risk, high reward sort, but I think an integrated secondary steel player, which is Godavari Power Ispat. This is a stock which I think was darling last year, where it touched almost levels of 500, 550, post which it has seen a massive correction and had hit levels of around 120. From there, I think it's hovering currently around 140, 150. The only good thing about this company is they are fully integrated. They have iron ore mines where I think their pellets are being produced, and more importantly, I think currently the pellet realizations are reasonably good for them, and they are continuously in deleveraging, debt deleveraging mode. And I think if they successfully show another 250, 300 crores of debt deleveraging like they showed last year, then I believe there is going to be some sort of re-rating from here. So again, I would like to warn the viewers that these are typical pockets where it's a high risk, high return sort of a scenario. So please, I think, trade or take a bet as per one's own risk appetite.
Let's talk about banks then, Parthiv. Yes, Bank had a field day yesterday. It was up about 13.5%. And then you have the comeback of, stocks like RBL Bank, Federal Bank, smaller private banks like DCB as well. What would you do now with any of these? Are you going to be tracking any of these stocks?
See, amongst these, I think, no doubt, I believe that RBL Bank is one where I think one should give some, in terms of time for the bank to show a turnaround from its massive growth rates to the recent spat of all the negative news that the bank had faced. And I believe, for all the negative news, the incremental credit cost, the lowering of growth from 35-40% to 20-25%, and 20-25% is still reasonably good. The stock has already seen a massive 50% downtrend. And more importantly, now the valuations have become extremely lucrative. And even at levels of 450, one of a very credible name which had parked a lot of money in RBL Bank at levels of 515 through a preferential route, I think did give a big thumbs up to the management's quality and wanting to back them. So I think, yes, they've had this bit of negative news. They still do have a lot of lending which is in the double, triple B sort of lending space. But I think what we've seen is the worst of the cycle in terms of downgrades. And now if the upgrades were to follow, then this same book would tend to look very well. So I think, I believe that in RBL Bank, probably we have seen the worst case scenario. And it's not a bad idea that the stock has recently rallied. But if any corrections from here to 5 to 10%, I think one should look into this for a longer term horizon. No doubt, I think a lot of pockets are over-invested in large cap names like HDFC Bank, Kotak Bank. But in the banking sector, in the private space, I do believe there are stocks like IDFC Bank or RBL Bank, which should be a part of portfolio, which can help to generate higher alpha over the next 3 to 5 years.
From a chart perspective, Manav Chopra, if you were to pit some PSU banks, Amit Harchekar, I'm so sorry, would you pit some PSU banks against the private sector banks?
Well, as I said, I would be cautious on banking stocks because Bank Nifty is also trading well below 50 DMA as well as 200 DMA. However, from a very trading perspective, we think SBI could be retesting the resistance of 287, 288. From there again, we believe it becomes a good shorting candidate with a stop loss of 300. We are expecting the overall short-term target for SBI to fall in the zone of 265 to 270.
Is there anything that you're positive on, Amit?
Yeah, we have a very positive view on Tata Motors. Now, one reason is we believe GBP INR, that is pound, is expected to move beyond 97, 98 in the coming weeks, and I think that should be a positive for Tata Motors. We have a positional view on positional target for Tata Motors at around 175, 180 from 6 months perspective. Another stock we are positive is Vedanta. Here we are expecting a target of around 230 to 240 from a 6 months perspective.
So a positional view on Vedanta, but let's wait and watch if that happens. The other one is SBI Life. There could be a small pullback today because of the OFS, which is priced at about 770, so about a 3% downtick. Again, similar question, Parthiv. If the stock were to correct today, would you use that as a buying opportunity?
Surely, Neeraj. I think you're aware of the fact that we've been constantly pitching HDFC Life amongst the life insurance companies. But no two ways about it. The second best player in this industry has not been ICICI Pru, but has been SBI Life. And I think this overhang of the supply, and eventually I think even there's a lot of talk about the banks needing to reduce their stake in their subsidiary life insurance companies. I think it's eventually going to come. So in which case, I think such an overhang, which does not change any fundamental aspects of the company or the future growth story of this company, I think and gives one a discount of 10 to 15% from the current buy levels, I think certainly should be used as an opportunity. And I think, Neeraj, let me be very clear. I think what we sense is that in terms of the protection gap, which is still persisting at 96%, this industry has a huge scope of growth. And in the developed countries, what we see is that these insurance companies are having at least similar or rather larger market caps than many of their banks. So in which case in India, currently, if we were to see all the life insurance companies which are in the listed space, and more importantly, the private sector, the market caps are hardly anything to brag about. And I'm very, very confident that over the next 5-10 years, if one has to bet on these names, then it has to be such credible names like HDFC Life, SBI Life, where I think one has that visibility that these are the companies which are here to stay, which will scale, and not the smaller companies where one has a fear that they might get merged into the bigger ones. If at all the smaller companies were to get merged into bigger ones, they will get merged into likes of HDFC Life or SBI Life or ICICI.
All right.
We're very confident on this.
Okay, Parthiv, we'll come back to that discussion, but we've got about 10 seconds for market pre-open. Nifty 50 there, the SGX Nifty suggesting a positive start, and you've got the pre-open also reflecting green. Sensex is up about 0.75%. Nifty, not so much, marginally higher. Yes Bank continues its move from yesterday. That's showing you, I think, a 0.5% gain. Vedanta has moved up about 2.8%. Coal India is up 1.6%. Titan, Bharti Airtel, IOC, ICICI Bank, which missed the move yesterday. In fact, ICICI was down in the red. Today has opened slightly positive at 397. Asian Paints moves up at 1570. Then you've got the likes of Cipla, TCS, some gains coming about there. Quantum of gains, not all that heavy. Amongst the losers, I think Yes Bank's now flipped into the red. That's down by about 5%. JSW Steel, Maruti is down 1.5% at 6,500. And then you've got the likes of Tech Mahindra, M&M, Tata Steel looking slightly weak. From the rupee perspective, some strength that's come back into the currency, 71.45 is where we've opened up. So 1/3% in the green.
Yep, the broader end of the spectrum, 2 or 3 names, SBI Life as well as Apollo Hospitals, and let's see if there is some reactive moves there onto those names. Not too much on SBI Life. The pricing of the OF is slightly lower. Apollo Hospitals as well, not too much of a move. So interesting start, but it's just the pre-open session. Maybe these rates will stabilize and maybe they might be lower. They might be well be stable right now, but they might be lower as well at the end of the pre-open session. NHPC showing an unnatural downtick. Maybe it will change. Eveready is down about 5%. Remember some clarity coming in about Duracell yesterday. And Alchem Labs, I think they've received some 4 observations. I don't know. They're not serious observations as per my conversation with Darshan earlier, but likely to start off about 2 or 3% lower. Let's see if it's sentimental and if it corrects itself or no. On the other side, all cargo. Remember yesterday, Bloomberg broke this story, and we'll talk to Parthiv about this, by the way, that Blackstone might invest in one of the JVs. That stock, after a 7% up move yesterday, looks like starting off well. Let's wait and watch. Lastly, the bond yield should come up on your screen, and let's see what they are doing in the session today. The rupees, okay, the bond yield is about 6.66, consistent hardening really. 2 days ago 6.61, now 6.66. Remember the upper end, as indicated by Jayesh Mehta, was about 6.75. This was about 2 or 3 weeks ago. Lots changed from now and then, between now and then, but still, let's wait and watch what happens. The yields for now about 6666 on a hardening stance. However, as we said, there are a lot of brokerages which are initiating coverage reports. Antique Broking is initiated on Alchem Labs with a buy rating. Darshan is joining us to take us to some of the points highlighted in the note. Darshan, the stock is not starting off too well, but why is Antique bullish on this?
Yeah, so a couple of things. I think they're playing in on the robust growth as far as the Indian market operations and the domestic operations is concerned. So what they're saying is that the chronic portfolio is doing extremely well for the company, and that has boosted growth for Alchem in the domestic markets. while even some of the legacy brands that they own in the acute space have maintained leadership. Now they are estimating 12% revenue growth, 18% EBITDA growth, and 21% profit growth on a CAGR basis from FY19 to FY22. They're saying that the rising input cost and investment in OTC business have now reversed, and that was the problem that was there earlier. And the incremental revenue will come in at much higher margins, and valuations currently are much reasonable, and the risk reward is in favor of Alkem at this point of time.
Right, Darshan, thanks very much for that. So watch out for that stock, not doing a whole lot much in the morning session at least. Sameet Chavan, Chief Analyst of Technical and Derivatives at Angel Broking, is joining us right now on the show. Sameet, thanks very much for taking out the time. On the index, obviously we've got a slightly positive pre-open. What would you do in terms of initiating a fresh trade there, considering today is the weekly options expiry?
See, as far as bias is concerned, no doubt we would remain optimistic, and as far as the opening is concerned, if we open with a 30-40 points upside gap, then probably we'll wait and watch. On minor dips around 11,030, 11,040, it makes a decent risk to reward ratio, because still if you see 11,100 call writers are active, and probably if in the second half if we see some kind of unwinding happening in that strike 11,100, then probably we would see this a weekly expiry happening beyond 11,100 as well. But directionally, it's a matter of time. We would expect this resistance of 11,150, 11,200 to be surpassed quite soon, and we expect this relief move to extend towards 11,350, 11,400. So for a day, in case of a minor dip, it would be a buying opportunity. 11,000, 10,950 would now act as a very strong support.
What are the stocks, Sameet Chavan, in this bullish scenario that you're painting? What are the stocks that you're betting on?
See, clearly in last 3 to 4 days, Neeraj, the entire metal and the auto ancillary space has been the flavor. So JSW Steel has been, one of the laggards within this space of late as compared to its peer counters. But we would expect some kind of, catch-up move in JSW Steel. Yes, yesterday this stock managed to surpass its hurdle and has closed around its, important level of 225, 226. So we expect a good move in this counter. Our target would be somewhere around 238 for next couple of days, can be bought with a stop loss around 221. And apart from this, Bharat Forge, which has finally managed to give some kind of relief move in last couple of days. Yesterday, for the first time, stock managed to give decisive close beyond 400. So we expect Bharat Forge to extend this lead. Target would be around 430, can be bought with a stop loss around 402.
A couple of stocks that are active, Parthiv. One stock which is active, which is Wockhardt, and one stock on which there are a number of queries coming in today as well, Deepak Nitrite. I know you track Deepak Nitrite, we want to talk about that too, but any thoughts on Wockhardt, the uptick that we've seen the last couple of days?
Not really. I think, Neeraj, this is a company which is terribly disappointed not only investors but a lot of credible pharma analysts who, I think, after meeting the management, get enthused on their talks, and then what they deliver is something totally different. So I think I'm really doubting the credibility to trust such a management to create long-term sustainable value for shareholders. In pharma space, I think it's certainly in interesting pockets, and there are a lot other better companies to play with. So probably Wockhardt is not the company that we are in.
Deepak Nitrite, Parthiv?
So in case of Deepak Nitrite, I think we know for the fact that now they have this huge capacity of phenol and acetone, and these are import substitute products. Despite the fact that recently the prices in terms of the spreads had come off, but we are not at all worried because they've built a state-of-art plant, and more importantly, I think there is some element of the crude oil prices. And I think what we like about the fact is that recently with the currency depreciation, I think their realizations are going to go up, and we are seeing a lot of other companies who will be customers of Deepak Nitrates now wanting to build capacities in India. For example, case in point being capacities in parachlorophenols. I think they are going to be huge customers of Deepak Nitrite. So what we also like about the management and their talk is going forward, they are going to go more downstream in terms of newer products, value-added products and phenol acetone. So I think this their core chemical business is very stable at this juncture, and more importantly, this company, which is Deepak Phenolics, can also create substantial value. And I believe that the management will have some sort of demerger plans going ahead, which will create very good value for Deepak Nitrite shareholders. So certainly it's a good next 3 years bet if one is having in the portfolio or one wishes to have.
All right. What about Sterlite Tech? The stock's now at about 136 odd, went down sub 110, almost nudging 100, but good pickup from there and in a very short span of time. Sameet, do you track Sterlite Tech?
See, of late, we have not been tracking this counter considering its underperformance and the gradual decline that we have been witnessing since the last many months. However, in last couple of weeks, there have been some early signs of revival seen in this counter. Yesterday also the stock managed to give decisive close beyond 20-day moving average for the first time in last many months. So this move is likely to extend because in the broader market also we are seeing good sharp moves in most of the gas segment stocks. So we would expect Sterlite Technology to extend this relief move probably towards 150, 155. But we won't be advising any kind of trade setup in this counter, but generally we avoid this particular counter.
Okay. That's Sterlite Tech for you. Another counter, if you've got a call on ICICI Bank, that's at 400 now, what would you do? Amit, Harchekar?
Well, ICICI Bank has been flirting around the 200 DMA, which is at 388. I think the moment it breaks, you should start opening short positions for a target of 365. Right now, in case there is a pullback, we don't expect it to extend beyond 402. So right now, it's a no trade. But as I said, the moment it breaks 388, one should open short positions.
Okay, no trade currently, but if it breaks the 200-day moving average on the downside, can open a short position according to Amit. Well, gentlemen, stay on. We're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Apollo Hospitals promoter Sunita Reddy is set to sell 3.6% stake in the company. The floor price is set at 1,450 rupees per share, which is at a 3% discount of Wednesday's closing price.
SBI will sell up to 4.5% stake in SBI Life Insurance via the offer for sale route. This has to be done to comply with the minimum shareholding norms.
Alchem Laboratories gets 4 Form 483 observations from US FDA for its facility in St. Louis, US.
Reliance Capital will exercise the oversubscription option of 3.15% stake sale in Reliance Nippon Life Asset Management. Lastly, Edelweiss initiates a buy on IndiaMart Intermesh with a target of 1,900 rupees per share. The note says large and growing number of buyers and suppliers on the platform is driving business inquiries. This is actually an interesting one, just recently listed. Issue price was somewhere closer to 970 or 980. From there, the stock has not seen a turnaround. I mean, it's just been one way up. It's 1,600 now, and 1,900 would technically mean doubling of the stock within just a span of a year. Now, all the new listings, right? I mean, we've been speaking ad nauseum about Polycab. It's not gained too much, but it's been stable. IndiaMart gaining, Affle India gaining. Metropolis. We spoke to Credit Access Grameen yesterday, and that stock has done well. All of these stocks, new kids on the block, the last 1 month at least, if not more, have just been quite spectacular for some of them. New businesses, they don't have a sectoral representation of sorts. They're pretty unique in their sense, most of them. Metropolis has a couple of other peers, but largely a unique business model. So all of these are maybe getting that niche premium too. Some very smart moves into some of these.
Yeah, complete standout actually. Parthiv, a quick take on some of these new listings, and you already spoke about Polycab, but some of the other ones like IndiaMart, IndiaMesh, or a Metropolis, or an Affle.
See, I think one thing investors need to be slightly cautious about is that as such the IPOs, where in most cases we have seen offer for sale, they're always priced at a premium. And even after this premium, no two ways about it, and after the couple of first quarters of their results, if the company tends to do well, we see a lot of pent-up demand in terms of investors wanting to buy into these new age businesses. But I think probably it's not a great idea to have a left out feeling and now start nibbling into these names, because they've already rallied a lot. And I think at times we've seen that whenever the quarterly performance tends to taper, I think these also heavily correct by 10, 15, 20%. So only if one is interested in these business models, one should not rush to buy this momentum. wait for, I think, some sort of sanity in terms of valuations, because currently, whether it is Metropolis, which is a great business model, Dr. Lal Park, again a great business model, and even India Mart, I think these are very new differentiated business models which can surely have scale over the next 5 years. But the current valuations are asking for a lot in terms of growth already getting discounted over the next 2 years. So I would prefer to wait on the sidelines, allow the valuations to calm down, and then look into these names.
Okay. Parthiv, we'll leave it at that. Thanks much for taking the time out and joining us today and giving us your perspective. Really appreciate your time. A couple of minutes left. On the other side of the market open, we'll of course be joined by Mihir Vora as well of Max Life. But as the pre-open rates have settled down, not too many stocks moving around. Just one name while we've been talking about the gainers, the losers list has. And Sameet, Chavan, a quick 30-40 second view on Wipro or any of the other large cap IT names. They had a corrective move yesterday.
Yes, but we would still avoid, at least going long. As far as Wipro is concerned, trading around its major support, so 240, 242, these are the levels to watch out for, and it's important on a closing basis as well. So if one has to create any kind of short position in this counter, one has to wait for a close below 242.
So you're not initiating a short on any IT stock right now, Sameet, I gather.
Yes, Neeraj, not at current level at least.
Not at current levels at least. Okay, less than a minute to go. Time now to get in the top call from our experts. Amit, I'll come to you first. Your top call for the morning.
Well, I would buy Hindustan Zinc with a stop loss of 205. We are expecting this bullish flag to turn in positive, and we are expecting a target of 240.
Okay. Sameet, Chavan, what about you?
I'll go with Bharat Forge. Expect a decent move. Continuation of this move. 430 would be the near-term target. Can be bought with the stop loss around 402.
Any trade on the Nifty Bank, Sameet? Quick 20 seconds. It's likely to start off 100 points higher.
See, clearly for the first time, Bank Nifty has managed to surpass 20-day moving average closing basis. So in case of a minor dip, 27,800, 27,750, that makes a decent risk reward ratio.
Okay, gentlemen, stay on. We'll just take in opening thoughts from you. But the markets look like starting off just above that 11,050 mark. We're talking about how crucial that is. Amit Harchekar was referring to that. The Bank Nifty about 100 points higher likely. And the broader end of the spectrum, which has outperformed quite meaningfully the last few days, would be interesting to watch in today's session as well. But here are the first rates. We're starting off 17 points higher for the Nifty 50, the Sensex about 92 odd points, 0.25%. The Nifty Bank 0.36% higher at 100 points higher. So good start for the benchmarks at least. The mid caps and the small caps should also come up on your screen. I reckon that they would have started off with the green. Yes, about 1/3% for the mid cap index. The small cap index about 28 odd points, so 0.22% for the small caps as well. Well, let's get the heat map and show you what's moving and what's not. A lot of green, very little red. Bharti Infra is the top loser, 0.78% lower. Wipro about 1% lower. So IT is a bit soft because even TCS and Infosys are in the red. Not big gashes, but in the red nevertheless. Speaking of downtick, Bajaj Finance, Bajaj Finserv, Axis Bank also marginally off. But mind you, the top loser is Wipro, which is less than 1% lower in trade. So no big gashes. What about gainers? Indiabulls Housing Finance up 1.5%. ICICI Bank 1.5%. Then the metal names which are continuing from where they left off yesterday. So JSW Steel, Tata Steel. Well, a couple of those names at least starting off well. We're seeing some gains for Larsen & Toubro yet again. Titan yet again about 1% higher. IndusInd Bank and State Bank of India too about 1% higher. So, well, it's an okay start, not bad. We continue to gain. Yet another day of gains. At least the start is looking like that. Let's see if it ends up like that. Just a couple of pockets I want to highlight. Some movers from yesterday's session and some brokerage notes that have come in, bullish notes that is. These are yesterday's gainers and steel. Jindal Stainless, JSPL, Rain Commodities, all of them. Had a very good day in trade yesterday, starting off positively. Let's wait and watch if these last. And then two notes that have come in on initiations on both of these names, India Mart as well as Seduction Chemicals. Axis Capital and Seduction Chemical is a big positive note, and that stock starts off about 5.5% higher, 6% higher actually for Seduction Chemicals. So this one is doing really well for itself. Devina, what are you spotting?
First with yesterday's big mover, so Walkout continues its gains from yesterday. The stock was up 20% on upper circuit. Today has opened positive by another 5%. That was pretty much clear with the indications from the pre-open session as well. All Cargo Logistics is the other one, the Bloomberg exclusive that Blackstone's interested. Yesterday's session saw that spike coming in, but then now it's cooled off. I think today's session is just about flat to slightly negative at open. You've got Lakshmi Vilas Bank, the stock's up 4.5%. JBF is up in the session 4.5%. Repco Home Finance at 333 is up 5%. And then you've got the likes of a Coffee Day, which has moved up about 5%. CG Power. Now, this is, I think, almost the 7th or 8th straight day of gains for CG Power, taking the 7-day total to 40% for the counter. So, on a daily basis, you're seeing the stock making big moves. Gati has moved up. That's 3.5% higher. Jagran Prakashan, McLeod Russell. Cox and Kings finally, a small penny name, but we've been only seeing it amongst the top losers. It's flipped over today's session. You're seeing it up 4%. Jindal Stainless, we already spoke about that one. IRB Infra, Texmaco Rail, and should look at all the other real estate counters that were buzzing yesterday. So Oberoi was up 10%. Then you had Godrej Properties up 6%. You had Brigade, you had Kolte Patil, which was up again in yesterday's session. All of these stocks are quiet in the morning session, so not much of a change there. And some of the auto names, if you have a Jamna Auto, you can pull that up as well. The stock has been active over the last few days. Today also up about 1.4%. And some of the tire companies, Apollo Tires, Seat, and those kind of names as well.
Okay. Quick 30-second views before we get in our next guest. Sameet, Chavan, to you first. Kesoram up 12%. Any thoughts here?
We have seen in last couple of days most of the stocks from the cash segment have risen substantially, and clearly this is one of them. Already it has moved from the levels of 50, so in case of a minor cool off towards 60, 58 can be bought into, but at least on the higher side we would expect the stock heading towards 200 moving average, place around 68, 70. So any long positions, one should start liquidating once the stock reaches its 200 moving average.
Okay, Amit, Harchekar, very quickly, Tata Steel 2% higher, 30 seconds, would you trade it?
Well, my view would be a positive. We expect a good retracement all the way towards 385, 390 zone. If you're opening long positions at these levels, I would say 360 should be the closing stop loss.
All right, gentlemen, we leave it at that. Thank you very much for joining us this morning, Amit as well as Sameet. Bringing in Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. He's joining us right now on the show. Mihir, thanks very much for taking out the time. Sentiment seems to be changing a wee bit, but too soon to jump on the bandwagon and start buying heavily?
Hi, good morning. Yes, sentiment does seem to be a little bit positive. We saw FII numbers positive after a long time yesterday. So that's something to be happy about. On the global macro front, I would say the oil price fall in the last couple of days is definitely a positive for India because, as we know, we do import a lot of oil and it impacts inflation, currency, everything. So that's one positive. But overall, looking at the global growth prospects as well as the domestic growth prospects, economically, I think the global and local economies are a bit of a muddle-through zone. Having said that, from the market's point of view, the kind of negativity that we've seen in the past 18 months probably has discounted a lot of those concerns. And if we believe that markets typically lead the economy by about 1 or 2 quarters, then probably in the bombed out segments, stocks, sectors, there may be good value already out there.
Okay. When you're talking about bombed out segments, are you referring to autos, real estate? There is some excitement around something that could come about. Metals have just about started picking up. Infra as a pocket in anticipation of what could come about with regards to the government spending, and some conversation about front-loading in, infrastructure expenses by the government. Would these sectors be primarily on your radar?
Yes, definitely, because we are not really expecting any kind of pickup in private sector capital expenditure. That can take quite some time to pick up. But what is immediately possible is the segments that you mentioned. There could be initiatives towards housing, real estate, auto, consumer finance, etc., which can probably help the economy in the short term. Because the long-term fixes are, of course, required, but they will take some time to pan out. But in the meantime, whatever fiscal leeway that the government has, probably can and will be used in these pockets.
Good morning, Neeraj here. You of course weigh in a bit on some of these factors or high frequency conversations that happen around autos. You reckon that it is this millennial demand which could be hampering, or do you believe that there's a temporary lull which will come back in terms of demand for autos?
Look, the millennial debate is probably a bit overdone. I mean, even if there was an impact, it can't happen overnight, or it can't happen in the last in a few months suddenly. That would have panned out over a period of time. So my guess is the bigger factor is still the availability of finance, the fact that a lot of NBFCs and banks have withdrawn financing to consumers as well as to dealers. Those are more of the factors which could create these kind of sharp turns. The demographic trends, etc., take much longer to pan out. So I think that debate is a bit maybe overdone.
Okay, so let's try and talk about pockets which are cyclical in nature, and if you believe that it's okay to try and bet on these stocks, even if you on the basis of how you are trying to time these cycles. Are you buying into the non-ferrous space? The valuations are still not as comfortable as the ferrous names compared to historical averages. There is some resolution, some positive talk between US and China. Are these telltale signs of going out and buying into these names?
So yes, there is good value in this space. In fact, the ferrous as well as non-ferrous metal space. But these are segments which we really don't own as core holdings. We kind of are, more of tactical trading opportunities that we look at, because global commodities typically move in super cycles, and at this point in time, there is no commodity super cycle, or there is no trend that tells us that the global economy will do well for the next 3 to 4 years. So to that extent, because there is deep value in these segments, we would tend to be more of tactical allocation approach. We would tend to take more of a tactical allocation approach rather than a strategic approach at this point in time.
No, a point well taken, Mihir, but not from a perspective of whether you would do that or not, but just trying to understand when the cycle turns, I think the prices won't remain. Would you think it would be would you think it would be an unwise move to try and do some allocation out here with the belief that the cycle may be turning, or is it difficult to call that right now?
So there is value, and we've seen that when there is deep value, you do get 20-30% moves quite rapidly. So if one wants to play for that, and given the little bit of hope on US-China relationships panning out, and the fact that China is again talking about fresh stimulus measures, it could be a tactical call, yes.
Would you be a big buyer, in some of the stocks where there has been, from the broader market space obviously, where there has been a correction in terms of valuations, but the business model still seems to be strong, and because probably the surrounding environment and the rest of the mid caps and the small caps are getting beaten out, these kind of stocks also sort of rode the wave down?
Yes, so for example, in some of the banking stocks, even in the private banking space, we have seen a certain amount of de-rating happening in names where there were certain corporate exposures, etc. But the fact that these are still private sector banks and they can take the corrective measures fast enough can offer good opportunities because they have been beaten down with the rest of the pack. Those kind of opportunities are definitely there. Even in the auto space, we have seen some of the good quality large names also being hammered down by almost 40, 50, 60% even in the auto ancillary space. But we continue to believe that these are names which don't, which will not lose their globally competitive position that they have built over the past many years. So we would treat these as more of cyclical opportunities rather than structural, structural de-rating stories. So there is definitely value in these good quality names across sectors.
One last question, and this is a common thought process, that in a market like this, It is the pure play FMCG stocks where you get your essentials from, where the spending is not going to go down, because you will end up spending on all your essentials. In light of that, would you still bet big despite the discomfort on valuations, despite what most of these stocks have done in the past, to go and invest freely?
So if we are talking about the markets picking up from here and the economy picking up in the next 3 to 6 months, then the valuations in the FMCG segments have already been overdone, because people have been hiding in these pockets for quite some time. Over the last 12 to 15 months, even though some of the good FMCG names have not given that great numbers in terms of volume growth, markets have still flocked around these names for the safety of it. So if one wants to play for a turn in the market, then this would not be the segment to go. If one believes that markets are really very uncertain and still there is some downside left, then probably this would be a place to hide, not otherwise.
Okay, Mihir, so good having you. Thanks much for taking the time out and speaking to us today and giving us your thoughts. Appreciate it.
Always a pleasure. Thank you.
Well, that's Mihir Vora. Not buying into the commodity names, doesn't believe that there's evidence of a commodity super cycle which will lead these stocks higher. Selectively buying into banks is what I guess was the highlight of his answer. Need to slip into a quick break on the note that the markets are doing well. On the other side of the break, we were talking about banks. The RBI mandate for external benchmarking of lending rates is credit negative for banks, says Moody's. We find out why from the author of that report, Shrikant Wadlamani. And we speak to VR Sharma of JSPL on the factors at play for steelmakers as the trade war shows some signs of easing off.